So far for the month of August, I'm up around $15,000 and we're only halfway through. And one of the concepts that actually helped me make this money isn't dealing ranges, isn't time-based ranges, and it's not fair value gaps or anything like that. It's actually order blocks. And this video is going to be something that you've never seen on the internet before. I'm going to give you a deep dive in understanding order blocks and how internal liquidity pools actually form a order block. And with this understanding that I'm going to give you, you'll know exactly when to enter within the market. And this is one of the biggest mysteries in trading. Most people don't know where to enter, and this video is going to break all of that down. So with all that being said, let's get into this video. Okay, so we're about to dive into what understanding order blocks are, and if you're new to my channel, this video is going to be slightly advanced, but I am going to teach you the basics to knowing what an order block is, introducing you to a new form of an order block, and also showing you a bonus to understanding a continuation to a order block. The first form of an order block is going to form like this: when we have price trading in one direction and there is a liquidity pool being made within the market. So you can see above this high we have a buy side liquidity pool, and then below this low we have a sell side liquidity pool. So order blocks which are born in liquidity are always going to be high probability, and order blocks by definition are a change in the state of delivery. So here, for example, we have buy side liquidity which is resting above this high, right? Once we trade higher and take out the buy side liquidity, I'm just going to color this in a different color, so we have green. And one thing you should know and keep in the back of your mind when you are trading these markets is when we are bearish, all up close candles should support the market lower, and when we are bullish, all down close candles should support the market higher. And that will make sense as we get into the video, but as you can see, this is the candle that takes out the buy side liquidity, and once we do this, this is the candle that trades into a liquidity pool. So this is a potential for an order block. This is a order block candidate. So this is order blocks taking liquidity. So once we take out the buy side liquidity, immediately you're looking for a candle to close below it. So this is where we will have a down close candle, for example. Once it closes below it, this is where this becomes a valid order block. So we validate it, and this becomes the candidate that price should trade into and support the market lower. And as we spoke about before, all up close candles should support the market lower. So once we trade into the order block candidate that we identified that traded into liquidity, and then we change the delivery of the order block, this is where we should trade into and then sell off. And one thing to note, a lot of people are like, okay, what if the wicks go through the order block? As long as no bodies close above 50% of the order block, you are fine. But one thing I'm going to teach you right now is, you know, when price like immediately pushes higher, but we leave a wick and then the body is just closed below a certain level. Why does the market do that? Let me tell you the why to that. So algorithmically, the market needs to rebalance areas. That's all it's doing, is creating inefficiencies and rebalancing them. And wicks and previous candles are no different. So opening prices of previous candles right here. So the opening price of this down close candle is actually very important to this market. This looks like a stick man, but the opening price to this candle is actually important for an area of rebalancing. So you'll often see wicks that will just trade through it and then trade back lower. This is because it's offering a fair value right there. So it's offering buy side liquidity, which was not offered. So only sell side was offered because it's a down candle. Buy side gets offered, rebalances it, and then it seeks the opening price and then pushes to the downside. And that's where you'll find your 50% levels holding up, and then you can look for your selling opportunity. So that's one form of order block, looking for liquidity to be taken, looking for 50%, and you're always entering at these levels. I don't care if you think the market's going to go higher. I don't care what you feel for the day. You need to trade what you can see and what you can identify. So here, once we trade away, this is where you're selling, and you're looking for a 1 to 2, 1 to 3, or 1 to 5, whatever your opportunity gives, and you're looking for the opposing end of the range. And this is the OB that you'll be focusing on because it was born inside of a liquidity pool. And now we are going to go over the next form of order block that I wanted to introduce you guys to, and that is an internal liquidity order block, which I've not seen anyone teach on YouTube, mainly because half of them don't even understand what they're doing, never mind understanding this concept. So as we spoke about before, we were focusing on liquidity for a order block, and this is the same concept. You can see this is where the market is trading lower. Sell side liquidity rests below this low. Buy side liquidity is above all of these highs. So for completeness sake, this is a dealing range that I like to focus on. So once we trade lower, right, this is where a down close candle is made. It trades into liquidity, and then we start to push away. So this is where it confirms a change in delivery once we close above it. So this is where we'll get a up close candle, confirms a change in delivery. So I'm going to color this in green. So once you get the confirmation of the change in delivery, you're going to find this is what the market's going to do. There's going to be a bit of price action made within here, and there's going to be liquidity that's being made below these lows. So down here, sell side liquidity rest. This is internal liquidity. As we've taken out external liquidity, we're not looking for the market to trade lower again. And this internal liquidity pool usually will have a down close candle within it. So you see here, this is where the market traded lower. This is where a down close candle is going to form. This is where we have a OB in internal liquidity. And that's exactly where you're looking for the market to trade lower. It's allowed to trade lower and trade below this low, but no bodies can close below it. And that's exactly where you'll find an explosive price move. And then we'll trade into the buy side liquidity pool. So the same concept can be applied if you wanted to drag this OB out in time. So if price does retrace back into it, this should be sensitive and we should hold up 50% and send it to the upside. So I know that might have been a bit confusing, so I'm just going to move on to the chart and explain it a bit more. Okay, looking at this price example, you can see sell side liquidity quite clearly rests below these lows and buy side liquidity rests above this high. So right now we have no order block candidate because this is where we traded into a fair value gap. This gap's been supporting the market lower. There's been no change in delivery. So right now, all we have to do is wait for a order block candidate to form. And as you can see right here, what happens? We take out the sell side liquidity. So I'm viewing these two down close candles as one. As soon as we close above this, this is where we'll change delivery and this becomes our OB candidate. Okay, so amazing. As you can see, we close above this with this candle. So once we do this, this is our OB. The market has changed delivery. What was I speaking about before? The market creates internal liquidity. So you can see below this low, this is internal liquidity. And what do I have right here? This is a down close candle. So as I said, with internal liquidity, OB is paired with it. So this should be a market that trades into this low, trades into this OB. 50% must be sensitive for this. And this is where you can look for a buying setup. So as soon as we trade below the internal liquidity, stop loss below the OB, and you can look for a 1 to 3 or whatever type of setup you want. So for this example, we have a 1 to 3 that's being offered. And there you can see we drop lower, take out the internal liquidity. Actually, the internal liquidity was also below this low. Sorry, I didn't see that. But you can see internal liquidity. How do you identify internal liquidity? This all comes from failure swing. So this is advanced market structure and understanding how the market is actually moving. But this is the type of stuff most of you need to understand because no one teaches it online. So you can see this is where we trade lower, take out failure swings. So failure swings, you can see this low failed to go below this low, that low failed to go below this low, and this low. So this is all holding liquidity and this is low resistance, but this is also internal liquidity because we've already taken our external liquidity. We trade below it, down close candle, changes delivery, 50% must be sensitive, worth a buy. This is a buying setup. And you can see you get a 1 to 3 trading setup out of it. So that was a bit on understanding OBs made in internal liquidity. It's one of my favorite ways to enter within the market. And I'm more than certain it's going to be some of your guys' favorite ways as well. And with that being said, if you do want to learn more about this and learn about it in a lot more detail, that's exactly where my one-on-one academy comes in. If you do want to find more information about that, there will be a link in the description down below. It will be the top link. You can apply and then we'll have an interview, me and you. Right, this example is going to blow some of your mind and you're really going to be like, okay, what he's teaching me is pure gold. So looking at this market, as we can see, we have buy side liquidity above this high. Why do we have buy side above there? Equal highs. We are never selling a double top, double bottom. I don't care if there's SMT or whatever. I never look to sell or buy double tops and bottoms. That's literally retail trading one-on-one. So that's how you get burnt out. So looking at this, what are we waiting for? Liquidity. Liquidity to form, a order block to form, and external liquidity to be taken out. So as simple as that. That's all we do and we wait for. Okay, as you can see, we take out the buy side liquidity. Please listen up very carefully. You can see once we take out the buy side liquidity, this candle is the one that helps push the market into the buy side liquidity pool. This becomes our OB candidate. This is where we change delivery once we close below it. So this is a market that's bearish. I'm not trusting buying setups. I want to sell and target these lows. So this low down here, this low down here. So that's all I'm looking for. These are nice targets for the market and that's areas that I can take partial. But how do you trade an internal OB? So once we change delivery and close below this, what is the next thing you look for? We have an up close candle right here. This up close candle is important because what do we have? We have internal liquidity. So there's liquidity resting above these highs and this high right here. So this is all internal liquidity. To validate this OB, price needs to take out the internal liquidity, and that's an area that we can sell from. So this is an area that you can put a sell limit with a stop above that high, and you're just looking for the market to trade lower. So you can look for a 1 to 2, which is right here, or you can look for a 1 to 3, or just look for the market to retrace even lower. As you can see, this is what happens. The OB, internal liquidity, price taps into it, pushes lower, trades into all of our liquidity target. This was our OB candidate. Look how sensitive price was. What did I speak about at the start of the video? Looking to focus on the opening prices of previous candles. That's what the algorithm likes to refer back to. Opening price, opening price, opening price, trades into all of them, trades into our OB candidate. We get our sell position. We are selling as price is pushing higher for the better risk to reward, of course. Touches into it, takes out the internal liquidity pools, trades into the sell side liquidity. So this is something that I've been gatekeeping, you can say, because it's too good to be on the internet. No one's ever taught it publicly. I'm the only one that's teaching it publicly, and you can see how well it actually forms within the market and how you can actually trade it actively every single day. And you can use this as a complete framework. If you actually listen to what I've been posting on my channel, look at all the time-based ranges, dealing range logic, you can pair all of this up. Dealing range, liquidity, OB candidate, takes out the liquidity, closure below, internal liquidity OB, takes out the internal liquidity. You know this is an area you can sell from, optimal for the selling opportunity, takes out the low resistance low. But that was all I wanted to teach about regarding internal OBs. I did want to go a bit deeper into trading continuations and understanding how to use order blocks to trade continuations in one direction, but I'm going to save that for another video. And let me know in the comments down below if you're interested in that video to learn about trading continuations. But with that being said, I hope you found this video insightful, and if you made it this far, make sure to leave a gem emoji in the comments down below. And remember, I'm rooting for you, and I hope you find success in this business. As always, enjoy the rest of your day.